in previous, hold on, let me get rid of you, hide video panel. Okay, so in previous Zoom sessions, especially the one last Sunday, we talked about, you know, not having to learn every single concept or like every single setup, right? It's just like with the strat, how I tell you all, look at only a couple of combos at the time and kind of build off of that. But there are certain like basic things that you should know in order to be able to trade those combos. So same thing with ICT, right? Like, so for example, with strat, you should know how to draw your Broadman formations, right? You should know full time frame continuity, right? You should know how to identify an actionable signal, whether it's a hammer, Momo hammer, shooter, Momo shooter, and inside, right? With ICT, you should know liquidity, right? And once you learn liquidity, whether it be buy side liquidity, sell side liquidity, which will then lead you into external range liquidity and internal range liquidity. And just because I'm using different terminology does not mean that anything of what I'm saying is different from the other, right? So, buy side liquidity could be high side, buy side or sell side liquidity could be high resistance liquidity. Then there's also low resistance liquidity, which we'll get into other classes. Because again, I'm not trying to throw everything at you at once, but today we will talk about just liquidity in general and knowing, at least being able to identify the difference between a liquidity run versus a liquidity sweep. Also, what is buy side liquidity versus what is sell side liquidity as well too. Give me a second. Let me check my notes because I had to write this stuff down. Okay. So just to keep it as simple as I possibly can, and feel free to ask questions, please. Take yourself. Let me see. Did I give you all the ability to take yourselves off of mute? Sorry. Ooh, sorry. Why can't I find the host tools?
Yeah, we pick it up as well.
Okay, good. Just wanted to make sure because I couldn't find the host tools. Um, check out the brand new toolbar. And got it. All right, cool. All right, good. So let's go ahead and just kind of get into it. So what I did, I'm using bar replay, so you don't think I like have a complete like something already ready to go, just knowing exactly like this is what it's going to be. So what I did is I went into the daily and I marked up buy side liquidity versus sell side liquidity. And excuse me, just to keep it as simple as possible, right? Liquidity buy side or sell side is just basically referring to areas where there's a significant amount of buying or selling orders, right? So buy side liquidity is going to attract buyers to that area where there's also going to be buy stops, right? And then that's where orders get paired, and then you all subsequently get the reversal back to the downside. Sell side liquidity, same thing. It's an attractive spot, for sellers to get to, and where you'll see sell stops and ultimately subsequential reversal as well too. So when we looking at an example like this, we have buy side liquidity up here. It's also relative equal highs, right? Actually, no, I think it is equal highs. Wait, let me make sure. It is equal highs. 121. Yeah, so it is equal highs. So we'll get into what relative equal highs are and relative equal lows are as well too in other sessions. Again, I don't want to throw it all at you, but looking at the top here, we got buy side liquidity, right? Where we have a previous swing high, in this case, two of them, double top, if you will, right? And then down here, we have a swing low, right? How do we know it's a swing low? Because the low of the candle on either side of it is not lower than this. So it is a swing low, plus it's a pivot as well too, right? Coming down, downtrend, pivots back up, swing low, swing high, same thing, coming up, pivots, swing, flips in the different direction. Same thing with this, is a swing high as well too. Both candles highs are lower than this high, and again, it's a pivot in direction back to the downside. So we have buy side liquidity, and then above buy side liquidity, we have buy stops. View there. And then below sell side liquidity, we have sell stops. All right. So essentially what you're looking at is if we end up with a liquidity sweep, let me explain it this way. Whenever price gets into liquidity, right, it's one of essentially three things that are going to happen, right? So first is it's going to come up and displace above, right? It'll displace above, and then it will come back and fall through, right? So we've seen that before. Essentially, from a strat perspective, we'll see where a candle will go up and just basically wick and then come right back into the range, right? The other formation, I'm trying to do this off of memory, so forgive me if I'm trying to remember it. The other formation is where it will displace above, pull back, right? Essentially using this as support and then gone, right? The third one is, sorry, give me 1 second. Let me try to remember the formation. Where it will not displace above, it will reject, make a low, come back, try to retrace, but ultimately make like a lower high and then continue down, right? So one of three things happens when price gets up to liquidity. And just imagine the same thing for a sell stop or sell side liquidity, but in reverse, right? So instead of it looking like that, it'll be, like that, right? And then, fuck it, I'll just illustrate it, right? So boom, 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 that's your second option. Or the other option is comes down, doesn't actually displace, boom, makes a higher low, and then we out, okay? Make sense so far? Put a 1 in the chat if it makes sense. So buy side, so the buy stops go above buy side liquidity, and then the sell stops go above sell stops go below sell side liquidity. How do you identify it? So essentially, I just did not mean to do that. I'm so sorry. Damn it. I just accidentally killed the bar replay. Shit. And I don't remember exactly how far back we were. Shit. I'm sorry, y'all. All right, let's try this again. My apologies. Fuck. Let's go random. Where are you? No, I don't want to go that far. Random again.
Yeah, can you hit Control Z and it pop back up? And then
I hit that's what I did, and it didn't like when I hit the Control Z, it didn't go back to where it originally was. There. Fuck it, we'll just do it like that. All right, clear that out. Sorry, guys. I'm gonna get better at bar replay, I promise. So what we'll do is to make it a little bit easier, we will go here, select, and get rid of all of you. Fair enough. Okay. Right. So buy side liquidity, this is the way that I understand it. Now, obviously, it's probably going to be explained a little differently, but for me, buy side liquidity is just swing highs. And what's the most current swing high? So you have a previous swing high right here. And what is a swing high? Again, as I stated earlier, it's where you have a candle, you have a candles high where neither of the candles to the left or right of it make a higher high than that candle. And also it pivots direction. So you see how we're kind of in an uptrend here. Excuse me. We're kind of in an uptrend here, and then we pivot and change direction. So let me get rid of magnet. So you have a previous high right here. I'm going to put that as buy side liquidity, right? But it's not the most current high. This is, right? This is the most current swing high. So because this liquidity gets taken out, right? We get displacement just slightly above it, and also we wicked above it, then now your buy side liquidity is up here, right? Sell side liquidity is going to be your most current swing low, and that's right here. Excuse me. That one's obviously a little bit easier to identify. So I'm going to change that to sell side liquidity. Okay. So the way I look at buy side liquidity and sell side liquidity, kind of like magnets, price is attracted to that area, right? It's what I've been saying from before. Price either is moving from external range liquidity, it moves from external range liquidity to internal range liquidity, then then repeats, right? External to internal to external to internal to external. Like that's all it's doing. It's moving from one set of liquidity to the other, right? So your buy side liquidity and your sell side liquidity is external range liquidity. Give me just 1 second. Yeah, Control Z. Yeah, sorry, thanks, Roddy, but Control Z did not work. I'm gonna figure it out because there has to be like something where if I accidentally close it, I can like get right back to the very beginning. But it's all good. This wasn't a pre-planned like date, and I had everything marked out. I'm literally doing this on the fly, so it's more, I guess, raw and authentic. And you don't think like I'm not saying I'm y'all thinking it, but like y'all don't think like I have a perfect example laid out, because you're not going to have a perfect example laid out when you're charting real time, right? So I try to use bar replay in that respect, where it's not a pure example. It's completely raw, and I feel that that helps you and become a better trader in that respect, right? So now I think it was Josh that asked the question. So above buy side liquidity are buy stops, right? And again, this is where price buyers are attracted to. So like, for example, right, you remember the rule, we buy low to sell high, right? So you buyers get in at the lows, but what is their target? Where are they attracted to? They're attracted to the buy. What the hell happened to I am not having a good day with trading view today. They are attracted to the buy stops, which are above buy side liquidity, right? So to me, the way I look at it is take profit areas, potentially. Take profit areas and then ultimately a reversal depending on what happens when we get above buy side liquidity. If we get above buy side liquidity and we're looking at a liquidity sweep, more than likely reversal, right? If we get a liquidity run, in other words, displacement above buy side liquidity, which means the candle actually closes above buy side liquidity or closes below sell side, just so you know, I'm not really just whatever I'm saying on one side, just reverse it for the other. Um, if it's a liquidity run, more than likely price will continue pushing up and heading to the next either internal range liquidity or external range liquidity. Right now, we're just talking about internals. Excuse me, we're just talking about externals. And the same thing for sell side, right? The sellers, right? Obviously, they get in at the highs, and where are they attracted to? What's the target that they're looking for? Right? And it would be the sell stops. I keep effing that up. It would be the sell stops that are below sell side liquidity. Let me stop here. Okay, good. That are below sell side liquidity. All right. So buy side liquidity, sell side liquidity, right? So what I was saying, just to recap the other part about the three things that happens with price, is that one thing when we're dealing with buy side liquidity or sell side is that price may fall short of liquidity, right? And then reject and then fall back into the range. This could also be called a false swing as well too, which leads into another concept of ICT called low resistance liquidity. But again, we will talk about that in another class. Because there is such a thing as low resistance liquidity versus high resistance liquidity. Because I know if you pay attention to what we're talking about, you're going to be like, well, which liquidity is going to be respected? Which liquidity gets respected more so than the others, right? So yeah, that's where your high resistance and low resistance liquidity kind of comes into play. All right. So anyway, coming back to the example. So that's one way. The other way is it displaces above and displaces above, comes back and uses that as support, and then we out, right? I'm sorry, I made a mistake. We get displacement above here on that first example, and then it rejects. The third one is, if I'm not mistaken, we come up, reject, right? Make a lower low, come back, make a lower high, and then we reject and then continue to fall. All right, so those three. And then for sell, same thing, displacement, or wicking, I should say, not displacement below, and then we come back into the range. The other one is we actually do get displacement, come back to retest, and then that holds, and then we continue heading south, and then where we come down, fail, make a higher low, and then we out. All right, so those three. Better examples in the education channel, just keeping it a stack. Better examples in the education channel. We do actually have videos out there about this stuff as well too. So I'll point you in the direction of some of the liquidity videos that I personally have learned from, so that it can help this situation as well too. All right, so we have liquidity marked out. Now we'll see exactly what happens next. So let's continue. All right, so we have displacement above our buy side liquidity, right? Let's see what happens on the next candle. Do we get new buy side liquidity? So in other words, if we get a candle that pivots, changes direction, and ends up being bearish, as well as ends up with a lower high than this candle, then now we have new buy side liquidity. Let's see what happens. So we end up being a liquidity run, right? Because we got displacement above, price continued up higher. So for the next two candles, and then we finally get a 3 that falls back down. But obviously we did not. I'm waiting to see if we can get. So now our new buy side liquidity is now this 3, right? So let's continue. We get a shooter and we continue to go, right? So this ends up being a pretty serious liquidity run, right? Again, starting back from where we had buy side liquidity here, right? We get displacement above. And remember, one of the models that I talked about is that price will end up displacing above and continue going. Here was your retest. So just to show what exactly happened, right? You get your displacement above, we make a high, we come back to retest, right? With this 3 candle, that's your retest. And then there is your basically the takeoff. All right. So I'm gonna go ahead and get rid of buy side liquidity for right now. Even though that's your most current one, but yeah, obviously we're well above that. So I want to see where do we finally get a pivot. Okay, there we go. So we finally get a pivot. Right. So new buy side liquidity is up here. And buy stops will be above that. And then new sell side liquidity is going to be here. Again, your most current low, right? So even though we're making higher lows, but this is your most current swing low. So sell side liquidity is here, and therefore your sell stops would be here, right? So let's see if we end up. So again, what's going to happen with buy side liquidity? We're either going to come back and retest and then continue to push, or we'll retest and then we're going to fail, or this is the reversal here that we're seeing. So if that is the case, then price is going to move into internal range liquidity, which is currently in right now. Internal range liquidity is your fair value gap right here, right? And we'll talk about how to play fair value gaps. But for this example, since we're only talking about liquidity for right now, or excuse me, external range liquidity for right now, what we're looking for is if price gets displacement outside of this fair value gap, again, more than likely what's going to happen is it's trying to seek out external range liquidity. Now it's either going to, again, get all the way down here, or it might fail, fall short, and turn into low resistance liquidity and end up being a failed swing. So let's see what happens. So what we did is came back, and then on the retest, you see we get displacement above. So because we get displacement above, we're probably going to continue higher. Let's see. There you go. And we out. Damn, this is a really bullish run. What date is this? Oh, well, duh, it's the 23rd, it's year 2023. So of course I should have went back further, but yeah, year 2023. So yeah, this is definitely going to be on a bullish run for a little bit now that I think about it. But is that making sense so far? Let me just find out the difference between liquidity and support and resistance. Doc, I'm gonna keep it honest with you. I understand the concept of support and resistance, but like as far as learning it officially and like what, the terms and everything, no. And liquidity, I guess no, not really. But yeah, I don't know. Like what's officially defined as support and resistance? Because for me, there's a lot of things that could be used as support and resistance. You know what I'm saying? It could be, for example, the previous week highs and previous week lows. That could be used as support and resistance and a potential.
That's there's also an indicator that I use for that previous 50 cent. Because crap. Hold up. Give me
Yeah,
1 second.
no problem. But yeah, I mean, you know, I'm honest. If I can't, I don't want to say that. I don't know how to answer that because I've never learned from, in my trading history, I've never taken up like learning. Some traders just, I just trade support and resistance, right? Never done that. So I don't really know how to answer you because for me, the 50% of a fair value gap can be used as support. It also can be used as resistance. An outside bar could be used as both support and resistance. 50% retrace, support and resistance. So like for me, support and resistance probably means differently than some people who've actually traded and say like I trade just support and resistance. Now, if you're talking about like swing lows and swing highs, then I guess there's not really there's not that much of a difference between the two. But again, it really depends. And I know that probably doesn't fully answer your question. Undo. That's not what I meant to do. I just meant to delete you. Okay.
So, my bad. So as far as that 50% stuff, sometimes I do use it as targets, like no matter what I'm trading, because those do be resistance points where it has it marked as like previous day low, previous week low, previous quarter low, high,
Right.
stuff like that.
Right.
And something else I've been using lately, say like when you have a large or huge displacement candle, what I'll do is take my fibs, the OTE fibs, and I'll draw 50% of it, and I'll make that as a target. In my opinion, a lot of this stuff comes down to support and resistance and different things of this nature. Now I know some of y'all, from messaging y'all this evening, y'all say, man, how do you find your place? So it's a multitude of ways that I do use it. Of course, I chart the Ferrari list each and every single day. I use those indicators, I'm not telling y'all to go buy this or whatever, because I know some people simply don't have the income to do so. But those indicators from Dynasty Drake, and the bot thing in the Discord, where I go, I'm sure y'all have seen me daily. I go search for the double inside days, the Nirvana days, the hammer days sometimes, and the Holy Grail days. Now, the meta play came strictly from just charting. I mean, I wasn't even looking at it. I was just going through my list, the Ferrari watch list this morning after we hit, Costco. And, I liked the way it was looking before it hit even trigger the day. And I was saying to myself, man, just trigger the day, man, this could, run like $10, $15, whatever. And that's exactly what happened. Um, I really love the hammer days as well. Those two rails, I love those as well. It's just simply, doing the same thing over and over and over again. Now when I'm um scalping QQQ, of course I'm on the 5 minute, but I look at the 15 minute as well. And I keep my eyes on NQ to see what NQ is doing. 10 times out of 10, whatever NQ is doing, QQQ will do as well. Literally, you also have to chart NQ the same way you chart any other ticker. I will tell some of you all, though, I think you all need to be, more talkative or ask questions, or if are curious of anything, especially during the day. Because I think some of y'all need to come out of y'all shell, because for whatever reason, it's like y'all have questions, but y'all scared to ask them in the group. And, currently we don't have any crazy people who are going to clown you or anything. And when I first started this server, I, made that a rule,
Let's
if
do it,
you
Ron.
clown anyone for asking, clown anyone for asking any questions, you're going to get reprimanded.
Yep.
And the reason is that because when I was in previous groups, when I didn't know a lot, man, people used to talk shit about you or clown you or whatever, and I don't want that in my service. This is a community server, of course, and we're gonna learn. We're gonna get to the bag. Now, there's some people in here like Sax. He's very knowledgeable, though he doesn't talk quite a bit. There's quite a bit of people in here. Roddy or just different people. I talk to a lot of people throughout the day or whatever. I think also like once you thoroughly understand how to read a chart, then you just need to keep your emotions in check. Like after you hit a big play or whatever, someone hit $700 a day, and they was like, they told me they messaged me immediately afterwards, and they want to go get back in the market. I'm like, hey, look,
Chill.
nope, yeah, get closing charts. You know what I'm saying? Get off of it, close your app. Because I know quite a bit of people, and I'm gonna say myself included. Like years prior, I would hit a play and I'd be, sort of like, man, fuck that, I'm gonna go do this. And shit, get clapped and wish I hadn't got back in another play. Now sometimes y'all see me, like on a super trendy day where, I didn't pay for a play, but that's not every day.
All right. Actually,
I got you, Roddy. I got you.
huh?
Now I'm at replying to Roddy's thing up in the
Oh, my bad. I didn't see the chat. My bad. I was like, he's like, you got me. I'm like, what happened? I'll be at work. I'm willing to. Okay. So take note of this picture, right? Well, you don't have to take a picture, but take note of it, right? So what I've actually been looking for so far, we've just been having liquidity runs, but right now we actually have a liquidity sweep.
Oh, hold up. I apologize about this. So I know sometimes y'all would see me be like, hey, watch the speed of the candles. And I haven't totally understood why that, notice sometimes the speed of the candles, it goes fast. Sometimes it goes slow. I haven't yet figured out quite exactly what that is. When them candles moving slow, I advise y'all don't get in them plays. Now, I kind of assume that, there's something with the market makers or whatever. And sometimes that'll be choppy price action.
Mm-hmm.
I figured out exactly why they do that. Now when them candles speed up, that's when stuff about to get aggressive.
Yeah. ICT actually goes off on a rant on that in his 2016 mentorship. He essentially just equates it to like, so when you're seeing like a candle that's not moving as fast, it's not like, it's basically like turtle speed. the algos ain't in it. Right. That's all the real the banks, the algos, institutional sponsorship, they're just not in it. And actually what he takes it a step further in a paranoid rant is that they're actually baiting you into, like let's say it's a bullish setup and it's crawling though, right? But it's a bullish setup, look real good. They're actually baiting you into that so that you can end up being the liquidity. So when they pull the rug out from under you, you get that fast ass candle to the downside. If that makes sense, right? I'm not telling
Another
you to,
oh, another thing, I want to tell you all because I see a lot of people on Twitter. They want to do this, they want to do that, but man, go at this at your own pace. I'm sure y'all seen. If y'all follow my social media, I posted a guy's, gains from today. What really is, he been back in the market about 3 weeks, and his goal altogether was to make $10,000. And now I haven't been giving him no plays, but I'm gonna say every single setup the past few weeks, he's literally been giving me his analysis and different things of this nature. And this man has made $10,000 from $1,000 now.
nice.
And it's showing. So what ultimately took place was, I remember a few years ago, Tensho, you might know who I'm talking about. I'm talking about Ruckus. We was in World Squad with him. He
I
made
believe so.
$40,000 like in a matter of like a week or whatever. But and this is coming from taking plays and different things of his nature. But he ultimately didn't know how to find a play on his own. Now he knows how to find it on his own. And after a year of sitting on the sidelines, he came back refreshed, with vengeance, and now he's smacking stuff left and right. And I told him, when he sent me that, man, maintain your composure, don't oversize because you have more, firepower to get more contracts, and only take, great setups, because it's gonna be something in the market every day that you can trade, but it might not be a good ass trade. It might be something that's gonna fake you out.
Right.
This is, each one of y'all just everyone's separate journey. I do quite well now. Not, I know y'all see me talking my smack, man, but this definitely wasn't the way when I started. I was getting my ass cooked, man. Some of y'all mentioned to y'all, why I hated Apple. I hadn't played Apple in over 2 years, 3 years, because Apple had smoked my ass for over 30 grand in one day, and I hadn't played it since. You ask Tensho, he'll give me a setup on Apple. I'm like, man, I'm not looking at that shit. You know, that's how bad of a taste he had in my mouth. Man, it's gonna get frustrating. You're gonna make money, then you're gonna lose money, and then you gonna realize, man, I shouldn't have did this, man. And I highly recommend y'all talk to other people that's trading in the market. And here, y'all hit me up, hit people up in the chat. This is what we here for. You know, go spend time with your family. Now I think what's really helped me too is like when I got in this game, I really ingrained myself in this shit. What I mean? I'm talking about I don't look at regular TV. My TV stay tuned in to Bloomberg channel, Market Watch, and shit like that. People call me lame if they want, but shit, man, nothing beats, making my own money, controlling my own destiny, no matter, who present. I control my own destiny, Republican or Democrat. And I'm not talking crap about none of them. So, don't think that way. At the end of the day, I can make $1,000 the first 10, 15 minutes of the market and call it a day. You take that time 5 days a week, time 4 times a week, that's over $20,000 money. If I can't live off of that, and that's just doing base hits, I can go 20, 30% and get that $1,000, depending on how I size up. Now, if I size up more than it, of course it's gonna be crazy. If I can't live off of $20,000 a month, then I got a hell of a habit and I shouldn't be doing this shit.
Finally, Jesus. Not you, Sal. Sorry. It's I was stuck in 2023 and it was during the bull run, so I couldn't get the example that I was looking for y'all to show y'all.
Man, look
Uh,
at kill it, bro.
huh?
Think about what Kill do, man. Kill take small amounts of money. Kill only trade small tickets, bro.
Yeah, he does.
And
Um,
I
he
like
doesn't. He
Josh.
just like grabs
I like
multiple contracts
I
up.
like what Josh said up in the chat. He said my first goal is to make $1,000 a week, then $1,000 a day. Man, that's very, very achievable. You just gotta compound it and look at it from a brick by brick situation. We had several people in the chat today. You know, now they don't post all this stuff, but I know, I don't know, for whatever reasons, I guess they feel more comfortable with, sending me the screenshots or messaging me privately, maybe because they, don't want other people in their business. And that's totally fine, though, but, y'all would be surprised at the amount of people that are making tremendous amounts of money in here. I mean, think about it. We have quite a bit of members in here, but they just don't talk, you know. Um,
Well, maybe
I would just say, just don't give up.
Yep. So
Yeah, right, bro.
yeah, yeah, I'm good. I'm good. So I'm sorry. Okay, no, I'm sorry, my bad. So I wanted to show y'all this example, right? So what we've been seeing so far is liquidity runs, and I want to show you what a liquidity sweep is. I do actually have another example as well, too, like a real-time example of what I saw today on the Qs and then also an NQ as well, too. Hopefully it didn't go away. So let's move on, right? So we get a candle, 2 up, right? But we don't get it to displace above buy side liquidity here, right? Hit the buy stops, and therefore we get a reversal right back to the downside, right? So there, right there is a liquidity sweep. I actually change it for me personally. Like, you don't have to do this, but if I see a liquidity sweep, I actually have a template for exactly that, right? It tells me liquidity sweep. It's a part of a setup that I've actually been, kind of perfecting, the inversion fair value gap setup that I've kind of been trying to perfect. So far, so good. I'll show you exactly what it is with the example on the Qs. But we get a liquidity sweep, right? So now at this point, where's price going, right? It's either going to go to external range liquidity down here, but it's also going to have to get through internal range liquidity, which is right here, right? So we have fair value gap. What does price do? Completely displaces outside of this fair value gap. So internal range liquidity is now considered violated, right? Because we end up with a 3. There was your retest. So if you want me to draw it out, remember what I drew out before, right? Buy stop, fall back down, retest, fail, and then continue down, which is exactly, well, almost exactly what happened. It kind of failed and fell short, right? But the point is, when you get that liquidity sweep, I want to point that out. When you're looking for liquidity sweeps or identify a liquidity sweep, high probability that you're catching a reversal back to the downside. Or again, if it's a liquidity sweep from the downside, you're catching a reversal back to the upside, right? So essentially we hit high resistance liquidity, we got a reversal, right? We took out this low here and we took out the fair value gap. Now it seems that we're reversing and heading back to the upside, but let's see. It could just be a retest. We'll see if that ends up being that. Nope, gone. Right. So it ends up being gone. Actually, no, I understand why it ends up, because that's low resistance liquidity right there, actually. We will talk about that in other classes, the difference between low resistance liquidity versus high resistance liquidity. But the point is, and I'm going to go ahead and rewind it, I want you to be able to identify liquidity sweeps, which is what we get right here. You had buy side liquidity right here. We get the candle, we get a candle that breaks the high, but it doesn't actually displace above it. It actually ends up displacing below. So essentially, again, what do we get something like this, right? So when you get that liquidity sweep, then again, at this point, where is price going? Price is heading back down into internal range liquidity, right? So if it were me and I'm seeing something like this, I'm probably going to target the 50% of the fair value gap. So if we're at 40, I know it's a small range, but if we're at 40, I'm probably looking at, I don't know, 39 put, right? Or the 40 put, because what is this, the daily? Yeah, so 40 put, right? And then if it continues heading down, like what it did, right? We get the retest and then it continues to fall. Let's see, the furthest it falls, the low, I think this is right before the reversal, right? So yeah, so it gets down to 39, ends up being a profitable trade. All right. So that again is a liquidity sweep. Now on the flip side, the liquidity run is actually, because actually no, let's change that. Get rid of you. Buy side liquidity, put the magnet back on, buy side liquidity, boom, there. So actually no, do we get display? Not quite. So let's see if we can get, there we go. Now we get the displacement, right? So liquidity run, more than likely going to continue, and it does, right? So just know the difference between a liquidity run and a liquidity sweep. Now to show that example, let's go to NQ first, right? So Sal, this is the one that I had actually texted you about. All right. So we have, this is on the hour. All right. So we have liquidity that gets broken here with this 3, right? This is your previous buy side liquidity. Instead, now we're up here. Where's the little menu? There it is. Okay. So this was today. This is an example from today. Me looking at when I had the opportunity, me looking at the futures, right? So this is 10 o'clock, the 10 o'clock candle. All right. So what I'm looking to see is obviously we get what's that, a triple 3 combination, and just looking to see what happens. I don't have a bias at this point, just looking to see what happened. Now, again, we did get a liquidity sweep from the upside here. So maybe we come down to get to external range liquidity since we have no internal range liquidity at all, no fair value gaps, except for this one that, I mean, well, not, it doesn't really get violated. So we have internal range liquidity right here, this fair value gap, but honestly so tiny it might just, you know, violate that and just head straight to external range liquidity, aka sell side liquidity down here. So let's see what happens. We end up with that too, right? Again, still respecting the fair value gap. And then we finally get displacement. No, sorry, not displacement. We finally get a sweep right here, right? So for me, changing that to liquidity sweep. Now, my next step, right? The candle is now closed. We get a liquidity sweep of sell side liquidity. And remember what I said about what happens, what's probably going to happen if you get a liquidity sweep versus a liquidity run, right? So we take out the lows here, liquidity sweep, end up being a 2-down bull candle, right? If you're a strat trader, you're probably licking your chops. We might be reversing back to the upside. Strat wise, what did this just create? Broadening formation, right? Just gave you a lower low. There's your broadening formation. And then obviously you got your top broadening formation. So you got room to the upside. Now, when this happens and this candle closes, what I then do is zoom into a smaller time frame, such as the 15, right? And I'm looking to see if we have violated a bearish fair value gap to create an inversion fair value gap scenario. Here's our bearish fair value gap. As a matter of fact, let me get rid of the indicator so that I can draw it out and make it a little bit more clear for you, right? So liquidity sweep, zoom in on a smaller time frame. look for, since we're coming from the lows, we're looking for a bearish fair value gap. If we're coming from the highs, then we're looking for a bullish one to be violated, right? So there is our bearish fair value gap, okay? And now we have an inversion fair value gap scenario. Two ways that you can play that, right? You can either take, as soon as we get displacement above, in other words, candle that closes above that bearish fair value gap, you can go ahead and take that entry, or you can wait to see if it comes back to retest that fair value gap, either right at the top, consequent encroachment, or complete gap fill, right? And then reverses back to the upside. All right. I ended up taking on the Qs, I ended up taking it immediately. Obviously, this is futures, but I ended up taking the Qs immediately, and I'll show you in the Qs real quick, pretty soon here. Right. So what happens, but I'm just going to play this one out. So we get a small little pullback, right? So if you didn't take this entry, if you wanted to take, let's say, this 2-2 reversal here, if you're a strat trader, and you wanted to take the 2-2 reversal here, you could have, and that's fine. You could take that entry and go. All right. Obviously it keeps going up, right? Until we hit that first pivot, we get a little exhaustion there. Okay. And then we finally make that lower high, so low resistance liquidity before ultimately I think we kind of fizzled the rest. Oh yeah, we had the drop back into fair value gap. Okay, boom. So actually a couple different places where you could have taken entry. Again, you could have taken it from the very beginning once we got displacement, right? 19,839, it runs up to 19,951, 952. Profitable trade. I think we can agree on that, right? Could have even taken this dip here, 2-2 reversal. Maybe not as profitable, comparable, right? But goes 2-2 reversal all the way up to the highs again from, what is it, 2-2 reversal, 19,868 up to 19,953, or could have even taken this hammer. I'm sorry, not this one. I'm sorry. Well, if you wanted to, but I would have taken this 2-down bearish candle, this reversal right here. Probably it's the same area anyway, so it really doesn't matter. But 2-2 reversal here, or excuse me, 2-2 continuation here, but obviously red to green. Could have taken that. What's that, from 879 up to, oh, that's 6 o'clock. Well, before close, 4 o'clock there, up to what, 922, right? So hold on, let me see. Can I go over inversion fair value gaps? I just did, but I can go over it again. Yeah, we can use the Qs. Let's see if the Qs will show that example. Let's go here. All right, this one was the one for 1030. So we got the 1030 candle on the Qs. All right. Excuse me. All right, we get the drop. All right, so this is my low, right? What do? We swept, right? We swept the lows here. So this is the hour, my bad. This is the hour. All right, we get a liquidity sweep. So what I'm gonna do at that point, let's get rid of you real quick. That point, zoom into, let's say, the 15-minute. For me personally, that's where I'm going, the 15-minute. All right, and I'm looking for that fair value gap. Sorry, I forgot to mark out my targets. So for me, 2 targets that I'm looking at. Here, target there. That's 482.28. Other target is 484.37. Those would be my 2 targets, right? So again, on the hour, we get the liquidity sweep, okay? Now I'm zooming into the 15-minute and I'm identifying my fair value gap, bearish, okay? Remember, we coming from the lows, right? We swept the lows on liquidity, so I'm looking for a bearish fair value gap, and I'm looking for a bullish displacement above it to violate it and therefore turn it into an inversion fair value gap, right? So basically, a bearish fair value gap should act as resistance when price is trading back up into it, right? It should act kind of like this, hit in there, and then we continue to drop, right? Does that make sense? If it's a bearish fair value gap, that's the way that it should act, and vice versa for a bullish fair value gap, right? So even though price doesn't do it here, I'm going to show like what the expectation is for price to have traded back into this fair value gap and then use it as support to continue trading higher. Okay. And it didn't technically do it here. I mean, it kind of sort of did, but you know, I don't really, that's not a clean example. But that's the point, right? When you have a bullish fair value gap, you're looking for price to retrace from external range liquidity back into internal range liquidity. And then again, if the trend is strong, you're expecting that internal range liquidity to act as support, and therefore you get a bounce back to the upside, and vice versa for bearish. You're looking for the downtrend. You're looking for price to retrace back up, hit that bearish fair value gap, and then reject and continue heading south. In this case, I'm looking for an inversion fair value gap scenario. I'm looking for the bullish candle or candles, right? Because it doesn't have to happen within that first candle. It could be the second candle. The point is you're looking for bullish displacement above this bearish fair value gap. In this case, I think we kind of get it, right? So again, once that happens, you have a couple different ways that you can trade it. You can take the immediate displacement, like once it closes on the next candle, take that immediate entry and go, which is what I did earlier today, right? This is at, yeah, around lunchtime, right? This is when I sent the crew off to lunch that I was training, and I decided to jump straight into the charts, and I got lucky. I didn't like know that this was happening. I just looked at the charts, was able to identify it, and I was able to take it was a 483 calls. 1 second, I'm just looking. Let me go back to my history. QQQ. It was 484. I lied. 484. 44 calls. My apologies. All right. So got into the 484 calls. Let's see what happens next. Okay. Right. So again, I took entry. Right. And it's doing its thing. Right. Inverted the fair value gap. Again, we got the sweep on the hour. I zoomed in into the 15 minutes, inverted the fair value gap. And so far, kept it moving. Now, I'm going to be honest, I got out somewhere up here at this high, right? I didn't really have time to, fuck around and watch it because, again, I was training. So I could have stayed in though, right? Because, well, you'll see. It'll become, yeah, see? It'll become obvious pretty soon. I could have actually stayed in longer, right? Because it gets from what, let's say the 40, we'll say I jumped in at 41, ran all the way up to 43.66 before we get that reversal. Let's see how it continues to play out. Yeah, see that big drop. Okay. Now, just for showing the example's sake, there again, remember, there's two ways you can play an inversion fair value gap. You can wait for the immediate displacement, take that entry. Risk with that, obviously, because you can get the immediate reversal and then you're done. Or you can wait for it to come back and retest the fair value gap. It actually hits the 50% of this inversion fair value gap to the T. So you could have taken this entry if you wanted to, and let it run. Right, what's that, from 41.81 up to 42.92? So yeah, 42 calls. Questions? My bad. Okay, good. Hopefully, yeah, hopefully that answers your question, right? So that was, again, I have not perfected it. I'm not 100% confident in it. However, I've been 3 for 3 so far in the Qs, using this setup. So maybe with scalping, this may actually turn out to be my setup. And yeah, I'm only trading this setup. I'm not like looking for anything else. I'm really just looking for liquidity sweep on the hour, right? Liquidity sweep on the hour, and then I'll zoom into a smaller time frame, look for that fair value gap, and then decide how I want to play it, whether I want to take immediate entry once it displaces above, or wait to see if it retraces. Now, keep in mind, I'm not looking for, 90, 100, 110, 120%, on this. For this, honestly, yo, like I start reducing position at 40% or above. And I know that I'm not saying that's a rule, but for me, I start reducing position at 40% or above. So once this started getting up there, I think what did I text you, Sal? Like I texted like 42% or something like that. That's when I started reducing position. Let me check. Hold up, let me check WhatsApp real quick. I had texted him where I was at with it too. Yeah, 42% on QQQ scalps. At 232, I started reducing position, and then I text them like a minute later, make that 96%. So yeah. Any questions on that at all? Any questions on like liquidity, anything that we talked about? I'm gonna point y'all to some videos that, I mean, in case like this doesn't completely make it clear. But yeah, I'll put, actually, we already have the videos in there, but I'll bring them back, I guess. I think Sal had dropped in some liquidity videos a while back in the education channel as well too, but hopefully this helps to like shed some light on it. So any questions at all? Like, speak now, forever hold your peace.
Honestly, I feel like once a person can trade QQQ or SPY, which I like QQQ a whole lot better, then you can trade any ticker. You know, especially scalping wise. You know, because believe it or not, before this year, before January and stuff, when I was taking ICT mentorship with Desi and Manoli, I wasn't even scalping. I was just known as a swing trader slash day trader. I wasn't doing what I was doing now, in which, I learned the basics of liquidity, market structure, buy side, sell side,
Yup.
and value gaps.
Yup.
Now, I taught myself, the order blocks and bearish breakers and stuff like that. That's where I get that unicorn set up from. And, it just literally comes from adding into the basics. Literally every weekend, I was studying some more of it, and I would add more into what I was already doing.
Thanks.
If you all been in the server, y'all really had the opportunity to see me build, I guess you can say, the way I trade QQQ, because at first I was just grabbing 5 contracts, and then I was grabbing 10, and then, I was playing them at the money, and now a lot of different tickers I'm playing out the money now. Just noticing how I could have saved myself a little bit of money and made more profit by going, a little bit out the money, and just noticing how some of these tickers move. Like if given the volume or something like Netflix, Meta is a prime example today. Tesla, when she moving, man, it don't pay to play them in the money. It pay to play them, and you get a better return on interest when you play them out the money. You can get, insane type of percentages. Now I could have easily played Meta inside the money today or just played it differently. And realistically, I could have got probably,
Hello.
and then my week would have been made. Now y'all notice though, the past few weeks, just because of the way the market been, I haven't been really loading up on a lot of stuff. You know, rarely have you seen me grab 30, 40 contracts on things. So that's just because of the way the price action been, and different, things of this nature. The market has been very unforgiving the past few weeks. And, if y'all remember correctly, I said months ago, when we get to the hard part, which this is the hard part of the market, it is going to really test your fortitude and make you more or less decide if you how bad you really want this. Because trust and believe, this is for, I'm gonna say, a lot of people be trading or taking chances in, because it's no rhyme or reason in the market. Stuff that normally been gapping up overnight has been gapping down with all the geopolitical stuff that has been going on. You literally have to take your profits when you see them right now.
Yep. That's what I'm saying. Like with the scouts, and I'm not looking for them home runs. They call them scalps for a reason. When a surgeon got a scalpel in their hand, they're not looking to slash your whole body from top to bottom. It's small, quick, decisive, cuts. That's it. Get in, get out. So yeah, I wanted to point this out just like for you swing traders, that
Oh, if you're swinging, I think realistically, it's best to go like at least a month out. Now it's gonna cost more, but
mhm.
that way you can, stomach the drawdowns. Now that ALB trade, that came from XLB and XME charts. And I guess more or less I'm proud of here of that trade right there, because it's like I feel we really caught it at the bottom. And when the market moves, or just when it's in a good place, ALB has the ability to move $8, $9, $10 in one single day.
Yep. Let's
So
take. I'm actually going to take a look at that next because we talked about that on Sunday, if I'm not mistaken.
that's another NUE. That's another one that I like to play at times. And these are both two tickers that you won't see a lot of people
Trading.
at all, because they in this just go to show you that a lot of people don't really dig for tickers and different things of this nature. This is exactly where ALB comes from. It's a lot of tickers that a lot of people simply haven't heard about because they don't, more or less, I think, take the time to really dive into these different sectors of ETFs and different things of this nature. You have subsectors and things like that as well.
Mm-hmm. So I wanted to talk about, how can I put it? Zooming out, right? When you're looking at tickers, make sure you don't just focus on, like, you see this drop here, right? But most people look at this and be like, oh, we just dropped. Now it's about, now it's going to run just because we dropped. No, what actually happened is we fell back into internal range liquidity, right? Remember, what is price actually doing, right? It got up to external, fell all the way back down into internal range liquidity. If it would have violated this, probably we heading down here. Now, if you go into a higher time frame, you probably would see it a lot more clearly, right? But this from you swing traders, when did we talk about Netflix? 2 weeks ago? I think so. 2 weeks ago, maybe last week. The point is, right? I think we talked about 650, but even if you caught this one earlier, we're looking at $100 move in over 3 weeks. 805, yeah. So 85 to
That was about
3 weeks. Well, two and a half weeks.
Yeah, and that chick had caught it actually, and she
Yeah,
swung
the
it.
one who said I think she took like 655 calls or something like that. Or
Yep.
Yeah, right. But that's my see, like the thing is, I know, like, especially for you newbies, I know a lot of y'all keep chasing every single day, right? But I'm using this as an example to say quality over quantity. You don't have to chase a brand new home run play every single day with enough patience, right? Because I think those contracts right now for 700, no, excuse me, 650 August 23rd. I think they're about 4,800 a pop, if I'm not mistaken. Right? Imagine grabbing 3 of them. There's your 10 grand right there. Obviously more than 10 grand, but almost 15 grand right there. And all you had to do was sit. That's it. Just sit. Okay. Now, ALB, let's take a look at that because we talked about this on Sunday. Okay. I still have, yep, I still got the targets marked out. I still got, oh, hold up. Where's the liquidity sweep? Ah, we talked about this on Sunday as well too, right? So remember how I was saying if you figure out, like liquidity sweep and all that stuff, you can trade any ticker you want. Boom. This is your actual example, right? Liquidity sweeps do not just only work on Qs and futures or whatever. Here's your liquidity sweep, right? On the weekly, you get a liquidity sweep, right? Here's your low. We sweep it, and then we get a reversal back to the upside, right? So let's actually use bar replay to get rid of this real quick. Okay. We get our liquidity sweep. Let's come back into the daily now. Okay. So we closed Friday. That Friday, we closed hammer-ish candle. Okay. Your entry, 79.88. What did I say? Go get the 85 call. No? If I'm not mistaken, go back and watch the video. It's not, again, it ain't an ego thing, but go back and watch the video, right? Because what I'm looking for is if we get this trigger here, I'm looking for this fair value gap to get violated. Right? If you can't see it, there it is. That's the fair value gap right there. Okay, so we get liquidity sweep on the week, then we zoom into a lower time frame. From the week to the daily, I identify my bearish fair value gap, and I see we didn't quite get it on Friday, but we did displace above the 50% of that fair value gap. So the 50% of that consequent encroachment, right? Remember what I said about fair value gaps and closing either above or below consequent encroachment. Probability is we're going to continue that direction. So in this case, we closed not only once but twice actually above 50% of the above the consequent encroachment. So I'm looking at if we get entry, we're more than likely going to displace up and out of this fair value gap. Let's play it out. Boom. First target, second target, and third target hit in one day. Okay, you well on your way to 85 already. So we close what, that 82, 81? It's a swing, right? Because I said go at least 1-2 weeks out. Second day. Fourth target hit. Third day. Fifth target gets hit. And now we working on, change that to target. And now we're working on sixth target. Oh, no, actually that got hit too. I'm sorry. Sixth target. Oh, so we kind of rejected at the gap fill here. So either we, oh, my bad. Either we continue to reject this gap fill and probably fall back a little bit, or we're going to tomorrow going to try to attack this gap. I would probably say look to see what price does around the 50%, the consequent encroachment of the gap fill, because you also have a previous low here, which can serve as resistance as well too. So mark out that previous low. I call it inflection point. Shout out to Casper. Right? So 90. But honestly, by that point, you shouldn't feel too greedy in taking some profits. Because this was an amazing trade. I don't know the percentage because I'm not in it, but amazing trade. If you manage to fill this imbalance, where would price go next? If you've been paying attention to anything I've been saying tonight, where would price go next? If we fill this gap fill and we get displacement above the gap fill, Where is price looking to go next? Nobody? Oh, my bad. To 199. So let me mark it out. Yes, Saks is well. I'll give both of y'all credit because I mean 99.47 is pretty damn close to 100 anyway. Buy side liquidity, right? It's going to external range liquidity next, right? Remember, price is moving from external to internal to external to internal. So that if you remember that, you'll be able to start having better targets, in my opinion, when you go out of the money, right? Because at that point, it's just going to be about identifying, okay, where are we moving from? We're moving from external to internal, or are we going from internal to external? If that makes sense. But beautiful trade on ALB. Sleeper. And I shit you not, I'm gonna give full credit to Sal because he had texted me. Sal, was it on Saturday? I think like Saturday night. ALB and there was another ticker. He's like, I think this is gonna be a sleeper trade. And yeah, ended up being a pretty damn well sleeper. So that inversion fair value gap scenario, even though I'm not gonna sit here and be like I'm 100% on it, it can also apply to swing trading as well too. For me, I'm still working it out, but so far, looking for the liquidity sweep on the weekly, and then zooming in on the daily for the inversion fair value gap. So far, from a swing standpoint, has been working out so far. Actually, I think that's why I haven't quit this yet. Yep. Liquidity sweep. Oh, no, the gap fill. That's what I'm looking to see if it'll do. Not an inversion fair value gap. I'm looking to see if it'll fill that imbalance of the gap fill. I mean, we'll see though. It's actually my contract is not, I think it's like less than 10% or maybe because of that drop. Yeah, it's still like negative.
Do a favor for me and go to SMH sectors and show them what's potentially going to happen.
What on what time frame are you looking at? The daily, the weekly? What's up?
The daily and the weekly, just going forward.
Oh, I mean, it looks like it's actually doing a TTO. Hold up.
Well, I actually have a gap that it has to blow through more or less. But the higher time frames is telling me that they want to go higher.
Oh, hell yeah. Yeah. So if you're looking at obviously the month is not over. We still got a couple of weeks left in the month. But if price continues to behave like it has been behaving, yeah, we set up for a 3-2-2 rev strat to the upside and probably gonna eventually take out this high.
I'm looking at the 5 week and the 6 week right now. They all got hammers on it. The 7 week got a hammer. The 8 week is inside bullish candle. The 9 week has sort of a hammer for me.
Mhm.
The month is a hammer. All these, these are all hammers. So, and with that being said, I'm looking at what this is, XLC got a hammer on the key, right?
There's
Going forward,
also
I think the best thing to do ultimately, like if you're gonna swing, get you some time, because eventually all this shit gonna go nuts again.
Yep. So there's also another inversion fair value gap scenario as well.
Also, something I noticed out of ARKK sector, which Tesla is in it. A lot of them tickers out of that sector like are coming from trading like 2 years, sideways like Roblox. I remember when we was in Westwood.
I remember
Man, that shit went over.
shit.
Yeah, yeah.
Crow blocks was the shit. Because even Crow hit off of that thing, had everybody going crazy. It
Yep.
was the shit.
Man, look here, you got Shop going nuts. Shop is
Oh,
north of
yes. Thank you,
$76.
thank you. I meant to talk about that. Yes, thank you. Sorry, let me go back. Let me go here real quick. Okay. So for shop, right? Strat wise, right? Obviously you get sorry, my bad. Obviously, here's the bottom of your broad information right here, right? Now, top, you could draw it here, but what I'm really focused on is this area right here, looking for price to get there to make higher highs and then possibly that broad information. If not, I'm looking forward to attack up at 83.39. Now you can see strong bullish move, right? What I say about fair value gaps. You know the trend is strong if it continues to create more fair value gaps, right? That's 1, 2. And so what we're looking for this week, well, actually this week heading into next week, we're looking for that same thing. But right now for this week, I'm looking for this as a target, 77.83. So you may want to look at, I know we got 2 days left in the week, but you might want to look at that as like a potential lotto, maybe like the 77 or 78 call as a potential lotto based off just the week. Now looking at the daily, we get that 2-2 continuation anyway. The gap was filled, obviously, as you can see here. So I think, yeah, we pushing for that next target again of 77.83. There's a double top there. So you might catch a little exhaustion once we get above that, but I think this will probably end up being a pretty decent lotto play. Shop for, I mean, you can always get time. Of course, I'm a fan of time, but if you wanted to do like a lotto play, Shop 77 is asking $62 a contract. So it should be small account friendly, and you should be able to, depending on the size of your port, you might be able to get multiple cons. But if you go for the 78, that one's only asking 34 a con. I mean, you could try to go for the 80 if you want to, but I'll probably say get time if you're trying to go for the 80 call. Unless it's your money. I mean, it's only $10 a contract for the 80 call, but I would just feel a lot more comfortable looking at 78 more so than the 80. But again, with the way the 80 is cheap, $50 investment, that's 5 cons. If it really blows up, then all the more power to you. So I just want to thank you for I knew I was forgetting something. So thank you so much, Sal, for bringing that up, because I was looking at it earlier today at work and I was like, oh, this might actually be a pretty decent trade. And the contracts were cheap. So again, 77 call if you want to keep it close to the money. 78, in my opinion, should hit. If it gets a really serious bullish run or bullish push, then your next target would be 79.29. And then the next target after that would be 79. So yeah, the 80, I mean, you don't need it to exactly hit 80, of course, right? You just needed to get close, and you're giving yourself 2 days worth of time. All right. That was one. The other one I was looking at was I think it might be time for round 2 on lift. So I originally had called out the 11 call for lift. So, just so you see the week, right? We crossed above. We did we've been fighting through this fair value gap here, but as you can see, we're currently above the consequent encroachment. So we, tried to displace out of it, but, rejected a little bit. But seeing the way today closed, outside candles, so I'm really looking for, the 3-2 back to the upside to take out 1188. And if that happens, then, my next target is up here at 1238. Obviously for strat wise, this technically would be a target as well too. 12-16, but you see why I'm targeting the 12 call. You could go 2 weeks out if you want. I don't think you need to like go months out. But if you do want to go, September 12 call for September, I believe it's actually not, I don't think it was that expensive. I think it was still small account friendly. September 20th, 12 call. Yeah, $53 a contract. So, you know, entirely up to you. Or if you think, you know, Lyft is really gonna, you know, take off, here are your next targets here, 1257 and 1330. So you could look at maybe the 13 call for Lyft for September 20th. That one's obviously gonna be, you know, even cheaper. It's actually only $23 a contract. I'm really trying to find a lot of small account friendly tickers. So you probably won't see me alerting like Meta or Netflix or anything as much, you know, because I know we got some relatively new people, and I don't want y'all to, you know, blow your portfolios off of just like one play. Okay, so there's more, but and I mean, in the interest of time, I just wanted to quickly show you Lyft, and then I wanted to show you Shop. Obviously, there's other tickers out there that are looking pretty good. I'm still in MRK. It actually did pretty well today. We'll see what happens. It didn't hit first target. It just took out entry. So we'll see what happens tomorrow, but I'm still looking for it to, you know, keep pushing up to 117.30. And ultimately, I want to see what it does around around this inflection point at 119.23, which is why I chose the 120 call, but gave it time. So yeah. Anyway, oh, sorry. Let's see what's in the chat. I want to see Nvidia at 130. I think Wade was talking about Nvidia still pushing. Let me take a quick look at it. I mean, ooh, that double inside is something to think about there. Hold on. Okay. Yeah, I mean, yeah, I could see the 130. I could see it. You know, obviously you just wanted to, you know, you wanted to trigger, of course, but yeah, I could see Nvidia at 130. Yeah, ideally, I probably wanted to take that out before possibly dropping, but we'll see. We'll see how she wanna. When's earnings again? Wednesday of next. Oh, so next week. Yeah,
Right, next week. So
yeah,
the contract's already juiced for next week. So if I could get a little bit of move this week, you know, I'll be
yeah,
happy.
yeah. Okay, yeah. I mean, I like it. That's why Wade was telling me to talk to Nancy. I was like, why are you telling me to talk to Nancy? What? Okay, I get it now. I understand. I'll talk to her tonight. But yeah. All right, y'all. That's all I really got. I hope the liquidity thing kind of helped. If it doesn't, you know, if it,
Oh, there.
huh? What happened? Okay. Yeah, I hope it helped. If you have any questions, don't hesitate to put it in beginner chat, DM me. I will find the liquidity videos from T Trades, and ICT's video is going to be a little bit longer on liquidity, but I mean, I don't know, but I like his rants. I actually get some gems out of his rants. So if you got 45 minutes to an hour to sit and watch, I mean, shit, watch it. All right. All right, y'all. When this is done converting, I will drop it into the Tensho Weekly Zoom channel. And yeah, love, peace, and chicken grease. I'll catch y'all on the flip side. So y'all, please talk in the chat, right? It's not important, but like if you lost something, like just ask. You know what I'm saying? If you haven't noticed, we've had a lot more admin engagement between Way and Peanut Shell, and obviously Jay and Phil. You know, they still doing their thing, talking and stuff. Sal, you know, feeling a lot better every single day. Once I'm actually done with training this week, so I should be more talkative next week. So yeah, I mean, you got people at your disposals, beginners as well too. If you don't understand something, just come out and ask it. You know what I'm saying? All right, y'all. Have a good night.